And now to our first conversation. Recently, Proshare released its report on Nigerian Tier 1 banks, tagged the Proshare Bank Strength Index, PBSI, and its implications for the Nigerian banking sector. Well, join us to discuss the index now is Demidun Shogo. She's a corporate analyst at Proshare. Great to have you on the show.
I'm so glad to be here.
Fantastic. So, what specific financial metrics would you say were used to evaluate and classify banks as Tier 1 in the PBSI?
Okay, thank you very much for the question. We have Proshare Bank Strength Index. It's a broader classification of Tier 1. We have an extant classification, but we decided to revolve it because we understand that the industry has evolved over the years. So we have a new metrics. We have the methodology involves a lot of metrics that actually assess the soundness of each of the banks. So what we're trying to achieve is that we actually evaluate banks based on their capitalization, their efficiency, their assets, their risk, profitability, governance, and digital income. So all this is being used to assess the performance of a bank. So we don't want to use the extant classification that just looks at the volume or the size of the bank. We want to look at the banks and in whole, like an holistic, we have evaluation of banks so that we'll know how well they are doing. And we've seen that we have 6 banks that are Tier 1 banks, and we have Tier 2 banks. We have the other 4 other Tier 2, while the banks with negative shareholders, they had the Tier 3 banks.
So how do the Tier 1 banks, that's Access Score, Zenith Bank, FBNH, ETI, UBA, how do they compare to each other in these metrics?
So in the metrics, it's actually weighted. So each of the metrics are weighted. And when we weight them and sum it up, it has to be above the average. So the Tier 1 banks are the ones that have above 50% percentile. That is how we classify them. So it is no longer that we have a static Tier 1 banks. It revolves based on their performance on each of those metrics.
All right, so I guess it's because we're used to reporting the FUGAs, that's First Bank, UBA. Normally, we report them as 5, but you're telling me it's a Fugazi at this point with the E.
Exactly. So we want a diversion from that because we've noticed that the bank has evolved so much. We've seen the likes of digital banking is now a very dominant part of banking. Also, it has to do with risk management has widened more than before. So those are some of the things we actually incorporated in order to assess bank based on these metrics. That's all the things we did, and that's how we have different type now. So surprisingly, we are back to FUGAs. In the past, we've done the report 3 times. In the first one, we saw that some banks actually fell up. The second edition, we saw some re-enter and some actually fell up. But this third edition, we noticed that we have the FUGAs are back. That's the likes of the FBNH, the Zenith. We have the Access. We have ETI, UBA, and GTCO. So they are back into it. But that doesn't mean that is going to be the consistent pattern of Tier 1 banks. So we're still going to see it based on their performance again using the same metrics.
All right, thank you so much. Definitely we'll keep tracking that index going forward. Demidun Shogo, corporate analyst at Proshare. Thank you so much.
Thank you for having me.
All right, we'll take a break now. When we come back, straight to the markets. Just stay with us.